I think, as you say, the initial prompt for a lot of people is to consume or buy businesses that which they consume. I think with the element of globalization that we have now, probably a lot of the stuff that our listeners are consuming would be made by Apple, or they're watching Netflix, or they're using all of these US-based companies. So I think there's a huge growing area of interest for a lot of people over there.
Well, it is true. And I mean, we're talking now to people that potentially are beginners in the market to understand a bit more about it. And I guess being open-minded is extremely important. You think, there might be more risk with that, and sure, there are different factors. You're investing in a different currency, for example, or there might be companies that you're a little more distant from. I did a live talk a little while ago. It's actually to a bunch of retirees, a lot of people that manage their own super, so a very different audience to that which we're speaking specifically right now. And I asked them about the compositions of their portfolio, which was to a massive extent mainly Australian stocks. And I asked them why that was, and it was familiarity. And I said, but what's the objective of your fund? Is it to invest in things you're familiar with or to optimize your return? Because they are not the same thing. And to give a more broad-based industry explanation to that, last year I managed to get a hold of a copy, don't ask me how, of a live portfolio from one of the larger industry super funds. And it was the current portfolio of their holdings.
Interesting.
And on a dollar-for-dollar basis, that particular fund had more money invested in Ansell, the company that makes condoms, rubber gloves, and other medical devices, that makes about $97 million a year in profit at the time. It had more money invested in Ansell than it did Apple.
Which is crazy.
Which to me defies belief, because you've got one of the world's largest companies, and it's not a speculative business. It is a cash machine these days in terms of the recurring income that sits there. Yet the predisposition to want to invest locally, even at a fund manager level, this is probably why more and more people should be managing their own super rather than trusting it to someone that wants to hold a tiny global player versus one of the world's largest company. Is why there's a ground shift. And so that conversation I had with that group of people saying you need to be open to growth. At the moment, the story for growth is the US tech sector.